The easing of the situation between the United States, US, and China is seen as having a great potential to provide a breath of fresh air for the Indonesian financial market. The easing of the trade war between the US and China has had a positive impact on Indonesia, especially in terms of increasing foreign investment flows. Global investors who previously avoided risks due to economic tensions are now more confident in investing in Indonesia, encouraging an increase in foreign direct investment (FDI). The latest data from Bank Indonesia, BI, for the period the 5th to the 8th of May 2025, foreign investors recorded a net purchase of 0.12 trillion Indonesian rupiahs, consisting of a net sale of 2.70 trillion Indonesian rupiahs in the stock market and 4.07 trillion Indonesian rupiahs in Bank Indonesia Rupiah Securities (SRBI), as well as a net purchase of 6.88 trillion Indonesian rupiahs in the government securities (SBN) market. The stability of the rupiah exchange rate against the US dollar is also increasingly maintained, providing certainty for business actors and investors. In addition, Indonesia's export opportunities have also increased because the US and China have begun to look for new trading partners to replace products subject to high tariffs. Multinational companies looking to reduce their dependence on China as a manufacturing hub are also starting to look to Indonesia as an alternative in diversifying their supply chains. With more competitive market conditions and global economic stabilization, Indonesia's manufacturing and commodity sectors are getting a positive boost, increasing the country's attractiveness as an investment destination. Indonesia needs to take advantage of this momentum by strengthening investment policies and increasing the competitiveness of domestic industries in order to gain maximum benefits from the changing global economic situation. Rupiah could be a target. Peace between the US and China could support investor interest in entering emerging markets, especially Asia, which is still cheap. Several Asian currencies that are considered attractive, such as the South Korean won, Indonesian rupiah, and Indian rupee, are arguably still undervalued and attractive to traders who want to take advantage of trading from the decline in the attractiveness of the United States US dollar. In addition to attractive valuations, China's stimulus and peaceful progress in the US-China negotiation talks have made optimism in the Asian region increasingly attractive. Fundamentally, it has been undervalued for a long time, said Claudia Kalik, head of EM Debt at M&G Investment Management. Based on data from Refinitiv, year-to-date YTD until May 13, 2025, the rupiah is one of the currencies in Asia with the worst performance because it weakened by 2.61%. This is in contrast to other currencies such as the Japanese yen and the South Korean won, which each strengthened by 5.55% and 4.17%. The prospect of strengthening Asian currencies was also clearly visible at the beginning of this month when the Taiwanese dollar surged. And this has the potential to help other Asian currencies catch up with the performance of developed country currencies. Moreover, emerging market currencies have long been in the red zone due to the announcement of reciprocal tariffs in early April.